Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to all the trade day team. Welcome to the Monday, the 30th of June, last day of the month, last day of the quarter, last day of the half year as well. So, a significant day halfway through the year. Also, it's Trade Day's fifth birthday. Over the weekend. I can't remember. Yesterday. It was yesterday, Sunday. So happy birthday, Trade Day. It's been a wonderful journey we've been on, and thank you for all our traders who have joined us on that journey. It's been a great success story. Others have come and gone and disappeared, and we have been slow and steady and cautious and growing steadily. Announcements coming tomorrow on July 1. Watch out for that. Some exciting further developments and potentially some good things for traders, shall we say? It's all good things for traders, but so watching out for that coming up tomorrow. Let's get back to the business of today's Bull versus Bear webinar. I'm going to go for our Monday run through, which is like slightly longer take on the week in here, looking back and looking forward. So we've got the two reports that we publish at the weekend, the macro summary, which you're looking at now, and the macro matters, which is the longer version. This one's running over 5 pages here, but the summary, just a one-page summary of that macro matters. You can get that in the middle column below where you're watching this in the members area in the dashboard. In here, the middle column's got the macro matters and the macro summary published each weekend, the fundamentals. The left-hand column, the technical analysis published daily after end of day. In here, after the day's finished, for the next day's trading, the technical analysis from Market Chartist, which is myself, and then also my company. And then on the right-hand column, we got all the news, the up-to-date news service from our partners at LiveSquawk, who also provide our Squawk. So check that out if you haven't checked that out before. So so let's move on. I'm going to go through the macro matters in here. So basically, US global stock averages hitting record levels. The major US indices at record levels at the end of last week in here, being buoyed through last week by an easing of Middle Eastern tensions, the Israel-Iran short 12-day war conflict, whatever you want to call it in here, the ceasefire holding, so positives from that. Oil having spiked significantly higher, moving significantly back lower to pre-conflict levels. Gold moving lower as its safe haven demand wanes, and stocks as the riskier asset pushing higher, and as I say, US averages hitting record highs. European and Asian stocks also doing well, not just confined to the US. On top of the easing of Middle Eastern tensions, the US and China signed a trade deal. So although details are still light on that, and there are some concerns about the lack of real details on that, nevertheless clearly moving in the right direction, and that's all seen as a positive. Fed officials last week making dovish comments. The doves in here potentially indicating lower rates as early as July. Maybe we're going, that's probably still unlikely. We'll come to the Fed watch tool shortly, but certainly looking for rates to potentially be lower than we were expecting, the 2 cuts before year end. From the Fed's dot plot chart, the market's starting to price it in maybe closer to 3 rate cuts by the end of the year, and further out going into next year with some questioning about from Trump about Jerome Powell's position, potentially more of a dove being put into his position, the Fed chair, and then potentially markets looking for more aggressive rate cuts going into 2026. US PCE inflation actually was disappointed on Friday. It was actually high. Remember, this is the Fed's preferred inflation measure. That was actually high. So having had 3 positives through the week, easing Middle Eastern tensions, US-China trade deal, and Fed officials, the US PCE inflation data did tick higher. Didn't stop markets still pushing higher going into the end of the week, though. And so markets ended the week on a positive tone. It's a US average of record highs. What we got coming up, remember, it's a holiday shortened week. Friday is the US Independence Day holiday. Futures markets and cash markets are closed on the equity side, so no markets are trading. US bond markets futures are the same. We're putting out a note on that. Remember, the trading will be shut off on Friday, so no trading on the holiday shortened week on Friday. Because of that, rather unusually, the US employment data, which usually comes out on the first Friday of the month, has been nudged forward to coming out on Thursday. So the US employment data unusually coming out on Thursday. that's really the standout piece of data in the week. But we also get global PMI data, with the first set coming, global data coming, the manufacturing PMI coming out on Tuesday, and then we get the composite and service PMI coming out on Thursday. So Tuesday and Thursday are the main two sets of data in here from the US. You also get US ADP employment change. Now, usually that's 2 days before. It's the Wednesday before the employment report, but it's actually still on the Wednesday, but it's now the day before the actual employment report. This is the unofficial private data in here. This is the official data on Thursday now. We also get some other important European data through the week as well. German retail sales and CPI today, UK GDP today, and German unemployment, EU CPI, and EU employment, unemployment on Tuesdays and Wednesdays. So, but really the focus on that global manufacturing PMI Tuesday, US ADP on Wednesday, and then global composite service PMI and US employment reports all coming on Thursday. On the central bank side, it's very light. We've got no real central bank events, but we're going to be watching out as ever from speakers from the Fed, ECB, and Bank of England, but particularly from the Fed. So that's what we've got coming up in the week. If we look on today, it's a very light chart on the US Chicago PMI. I've got Bostic speaking at 10 o'clock, so maybe watching Bostic. So it's a light calendar in here to kick off the week in the US. Turning our attention to the major news-wise, this is the main development story in here. So Canada drops its tech tax. So basically, because of the tech tax, US broke off trade talks with Canada, and the Canada has scrapped its digital service tax on tech firms, and that's now seen those talks restart. So that's definitely a positive. That was a bit of a concern for markets. Obviously, one of the US's major trading partners is Canada, so those those talks restarting. France is confident EU can clinch some form of a deal with the US before the July 9th deadline. So more positives coming out from the EU as well. So those are the two main events that we've seen overnight, really. So world shares hover near record highs as US-Canada trade talks revived. The euro's big beautiful moment. That's just basically talking about the dollar continues to lose ground in here. So dollar continuing to weaken, which means the euro vis-a-vis is doing particularly well, and so euro significantly higher, dollar continuing on its downward path. S&P 500 set to extend gains on trade talk headways, again referring to Canada there, and potentially Europe as well. Dollar resumes its decline. Canada drops digital tax. That infuriated Trump to restart trade talks, all the same stuff. The US futures rise as trade progress lifts sentiment. So mostly about trading this morning, with the main focus on Canada. Canada rescinds digital service tax to advance stalled US trade talks. And world shares hover near record. I've already had that one there already. Asian stocks then, the Nikkei significantly up, nearly just over 0.8 in here this morning. The Hang Seng was actually down nearly 0.9, but in Europe, in here, markets are relatively unchanged going into the beginning of the US session. The UK FTSE is down 0.2, and the DAX, the German DAX, and the French CAC really hardly changed at all in here this morning. But US futures, as we said, notably higher with the resumption of those talks. 0.7 up already on the Nasdaq this morning, and nearly 0.5% on the S&P. Turning to the interest rate markets still not pricing in much chance, but now we're starting to price in a chance of a July cut, as we said last week, nearly over 21% in here. And by September, we're certainly looking only now 7% chance we haven't cut rates by September, and maybe by September 90% chance of a full 50 basis points by September. By October, now we're looking for a more chance of that full 50 basis points. Only 27% chance we haven't had 50 basis points by October. And by December now, the higher risk now is we've had 3 rate cuts, or even 3 rate cuts for a total of 75 basis points anyway. Might be one bigger rate cut. So being priced in 3 rate cuts now by the end of the year. Remember, the Fed only just told us in recent weeks that they're looking to cut by, the expected rate is down by 2, but there has been, seems, a slightly more dovish shift within the FOMC, over the last few weeks, with comments that have been coming out. Interest rates on the longer end continue to decline in here, so pushing lower in here over the last couple of months, actually, just drifting lower on the 10-year in here to the lower end of a broader range for the year. And you see this morning here nudging back towards lower yields, and that means prices stay positive and the outlook remains bullish right the way across the yield curve in here. So looking at the US futures, 30 on hour analysis, 30 years, 10 years, 5 years, 2 years, all pointing higher. So markets remaining bullish. Bullish on price, meaning lower yields, and that helps to add to the bullishness in stocks. So stocks obviously moving up to record. So the cash markets are record highs. Futures markets not quite there yet. So they're a record high on the September contract, 62.77 and a half. We're not there yet, so but getting close. And similarly in here, 22. Don't think we've been there yet, right? 22, or maybe we did just eclipse it. No, 22.780. No, I think we've been through there. Excuse me. Yeah. So Nasdaq has breached, but the S&P hasn't. So Nasdaq breached. S&P hasn't yet taken out its record high. So looking for the markets to maybe move towards then. I'm saying that though, are we up and through this morning? 62.77. No, we're not quite there yet. So S&P 500 getting close, but not quite there yet. So that's going to be the benchmark really going into the day, monitoring the 62.77.5 level, see if we can get overcome that. That'll be a high on the futures. Remember, we've already had new high closes on the cash market, not yet on the futures market. So that's the key line in the sand going into the day. Above there, we could see some stops run and false buying. So markets remaining bullish going into the day, even more bullish with the Canada developments in here. No real massive data in here to focus on today, but do keep an eye on potentially Bostik at 10 o'clock today. Then we've got most of the data. Tuesday and Thursday are the big focus on the data, and to an extent Wednesday with ADP employment. So keeping an eye on that for the rest of the week. Watching out as well overnight in here for announcements from trade day. There could be some good news coming your way. So watching that coming midnight tonight as we go into July the 1st. I'm going to wish you all a great trading day. Take care, stay safe, and we'll be back with you with another Bull versus Bear webinar tomorrow, Tuesday, the 1st of July.